is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. Sorry about that. We will get this market cranking. We have the Dow Industrials right now down 188. NASDAQ is down 61. S&Ps are down 19. Gold contracts down $3.80 at $12.70. Gold had an ABC structure on the way down, folks. Your price projection was $12.67. It goes to $12.62. Rejects lower price, catches a bid. Silver's trading $16.33. You got light sweet crude at $65.67 a barrel. Notes and bonds, they want higher price, lower yield. You have the 10-year note up 8 ticks, 119.27. 30-year bond up 15, 143.31. And good old King Dollar. King Dollar looks like it's giving it up, folks. King Dollar went to a higher high today, testing the highs of October of 2017. Tested it yesterday, failed. Tested it today, failed. We're at 94.440. The euro caught a good bid. The euro up 47. We're at 116.19. The yen is trading at 109.90. Our phone number is 877-927-6648. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy's got an outstanding show right here. Every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Also, he's got 2 great newsletters. He's got Daily Essentials, which is a daily newsletter. He's got the Techno Commodity Report, which is his weekly newsletter. You can come over to our website at TFNN. Both of them 30-day money-back guarantee. Andy Hecht, what's going on?
How you doing, Tom?
Doing great, man. We finally got a guy.
Good to hear your voice. Good to hear your voice.
Yeah, that'd be nice. We're on the radio and on the TV. It would be nice to hear your voice.
Exactly. So, dollar, you mentioned, bearish reversal today. Very interesting price action there in the dollar on some good volume in the futures market. But the market is awaiting tomorrow's OPEC meeting. This is the big one here.
You mean for the oil market, right?
The oil market. Well, a lot of markets are waiting to see what OPEC says because oil really has a lot to do with a lot of things in the economy. So let's set the stage for tomorrow's oil OPEC meeting, if you don't mind.
Sure.
You have the Saudis and the Russians who made the announcement that they want to see production ramped up by 1 million barrels a day. And that was said at the end of May, and that's what got oil going on the downside. From 72.90 down to, our current level. Got a little bit lower. The key level to watch tomorrow, 62.58. Now, you're getting some pushback from other OPEC members. We have to remember that OPEC's mission is to keep the oil price as high as possible for their members. You have some pushback from the Iranians, from some other OPEC members as far as 1 million barrels per day. Going to be very interesting. I think what's baked into the oil price here is a $500,000 increase. If we get 1 million barrel increase, I think oil will trend a little bit lower. We might go, take a look at the high 50s. If we get no production increase, oil will go higher, and that's where we stand here. I think if oil does go below 60, though, given the economy, probably a buying region there in the oil.
Did you see, so August of last year, that's when Andy Hall closed his hedge fund, right? Oil was at $47, right?
Right. He was liquidating in July, in June. By the way, today's the 1-year anniversary of the price going to 42.05.
Okay, now this is really sick because Andy Hall announced today he's actually going to be the CEO of the biggest hedge fund that's ever been made, trading over in London.
Really? I didn't even
Yeah.
see that. Which hedge fund?
I forget the name of it, but if you Google it, it was on Bloomberg this morning. It was like, I was on the way to work. I says, oh my God, particularly because I says, is this another, just divergent deal that can you come back in the business?
Is that the kiss of death?
I know, man. I know. Heavy, no doubt, man.
Kind of scary, but we'll see what that, listen, the oil market's a lot better than it was when he left it. No question.
Oh, totally.
About it. I mean, I'm liking the processing spreads are still strong. They've come off over the last couple of days, but still strong compared to last year. And listen, like everything else, oil is susceptible to this trade deal. The trade issue is really hovering over all of these commodity markets, Tom, here. Grains, energy commodities, industrial commodities. If we're heading to a global recession because of a trade war, that's not very bullish for commodities. But if we get any kinds of deals done, could be very bullish for commodities. So, lots of volatility on the horizon.
Oh, yeah. So, yeah, we'll bring you right over to, it was interesting. So I was on the air last night when Daimler came out and said, bottom line is that they're going to bring their numbers down for the year. And what happens, folks, is that, we were talking about it last night, but it's very unusual when you have a monster company like that. And, of course, our futures are still open. I says, oh, this is so cool, man, because guess what, folks? The DAX has futures. Bottom line is that if you take a look at Daimler Chrysler, this is a monster ABC down. This thing gapped down this morning like in a big way, And Euro-wise, let's see.
By the way, the German car manufacturers are saying they want to see no tariffs either way. They want to see free trade. Obviously,
what's going on is that Daimler makes a huge amount of cars in the United States, and they go to Europe. That's the bottom line. So.
They make the SUVs in the United States. They don't make the big sedans. And the big sedans are the big money makers for them.
Well, those big SUVs, man, are 70 or 80 grand.
Yes, but the C-Class, all of the ones made in Germany are where they really make their big profits, from what I understand. And
I suspect so. You know what I mean?
Right.
I know what you're saying there, but
they're going to put a lot of pressure on Merkel and the EU to do a deal, because they don't want to see this. This is a big addressable market, the U.S., for them. So, it's going to be very interesting. I think that trade deals get done eventually, but it's a rocky road until they do, and we're going to see a lot of volatility.
And how many people get hurt in between it? You know what that's always like? That's like when I keep hearing everyone say, yeah, it's going to get done. That's like saying that, hey, listen, the economy is great. And when you have a job, it is. But the people that don't have a job,
it is what it is.
Listen, we have a great economy right now.
You and I are not going to affect policy, and we look at these markets, and the bottom line is that these markets are going up and down with the trade issue here, and that's going to continue until there's either a deal or there's a war, a trade war. And the bottom line here is that, we have to kind of interpret what it all means. And when it comes to the industrial commodities, the copper, the aluminum, the nickel, the lead, the zinc, the tin, the agricultural commodities, these things are on the front lines of this trade issue. And, right now it's like riding a psychotic horse through a burning barn, because each news story that comes out, these things are going to move, and it's going to be a very busy summer. The weather, all of the standard fundamentals and the technicals that we look at, they get blown away by news cycle items right now, and that's really the problem with the current environment in terms of interpreting these markets. But, hey, it also creates a trading paradise out there because, but wider trading ranges means more opportunity for nimble traders with discipline.
It's cool. When I was on with you on Tuesday, right, you're talking about the aspect that, okay, so, of course, the Chinese own the most amount of bonds, and will it come down to the point that we're going to sell the bonds? Well, if you're watching Tiger TV, look at this headline that I put up. Now, this came across at 3 o'clock this morning, right? Russia, they not only basically sold.
Saw it, buying gold.
It
Gold.
gets even better, though. That's right. Russia was rethinking, folks, where it wants to be, and so they sold the debt. This is the most debt they sold in a long period of time, but simultaneously they bought gold.
Absolutely. And you know what? I saw that yesterday, actually. And the bottom line is that that's something that Russia and China have both been big buyers of gold to over. They're the entire central bank sector of demand for the gold market for the last couple of years, and that's not going to slow down. And by the way, if the Chinese do start selling some U.S. debt, that's exactly where their money's going to go. It's going to go into gold. They're not going to start buying European paper at these inflated prices.
Yeah, no, hey, listen, man, we'll see how it shakes out. It's going to be
someone's
pretty
got
wild.
to buy gold and keep the price up, right?
Well, yeah, seriously. Well, I mean, this is, we had that gold contract today. It rejected lower price, hit the price target, did all of the above. We'll see where this dollar wants to go. And, the euro caught a nice bid out here. I mean, it doesn't look like it's up a lot. But the bottom line is that moved from 115.09, and we're at 116.13 right now,
We have to remember that with the dollar here, Tom, and with the euro, what the ECB did last week was basically move towards tightening credit. That should put some buying into the euro. I mean, the knee-jerk reaction was, hey, Draghi continues to be very bearish, but the bottom line is it's a move towards tightening, and eventually the gap between the short-term rates will narrow. It's going to widen for a couple more months, but it'll narrow eventually.
Stay right there, folks. Andy and I are going to be coming right back. We have the 10-year. That's yielding at 2.89 right now. Our phone number is 877-927-6648. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off 63, S&Ps are off 20. Percentage-wise out here, what you have the Dow down 0.8%, NASDAQ down 0.8, S&Ps down 0.6, and we'll see how this market comes into the close. It's going to be intriguing, folks, if in fact we have a change of venue out here today in the aspect that they seem to be selling the market coming into the close. The market had tried to make a comeback. The S&Ps are only down 11 points. Bottom line is that as I started the program, now you're down 19 again. We just had the S&P itself break a new low intraday. So you can expect more action coming into this close out here. It looks like they want to sell this close. Talking with our man, Mr. Andy Hecht. We are talking commodities, markets, all of the above.
They still love those tech stocks, though.
Yeah, they love them, and we'll see how long that little love affair lasts. There's no doubt.
Exactly. We'll see how long they love them before they hate them.
You got Amazon down 19. Facebook is at high. Netflix, if we take a look at Netflix, that made a new high, but I believe it sold off. Yeah, nothing. That's out of high. Bottom line, it's out of high.
Yeah. So someone in the den asked about the wheat market.
Okay.
You know, the bottom line, we got soybeans down at 880. We got corn down below 360. But we have wheat, you know, the September wheat's up at about 507. Wheat is the least impacted by the tariff situation because the U.S. is not the world's leading wheat producer. So, you know, but it does move in sympathy, Tom, with the other agricultural grains. So, you know, a little bit of weakness there. And it's like all of these things. We have this is not a usual growing season in the agricultural commodities this year. We have an exogenous factor hanging over this market that's going to make it look great at times and make it look awful at times. So we have to trade with stops. We have to take profits when they're on the table. I mean, I think that corn and beans are down in the buying zone here, but you have to trade them with very tight stops because, you know, one more whisper of retaliation from China, you know, all of a sudden these things go to decade lows and then they snap right back. So they're stopping people out all over the place.
So right now, I mean, the way it's set up right now, July 6th is going to be the first tariffs that go into place. We really don't know right now what the Chinese are going to do. Is that correct?
Well, they have said they have mentioned products that they're going to slap retaliatory measures on. One of them is soybeans. Another one is pork. Is pigs. So, you know, we do have some ideas. But, you know, do we know exactly? No, I think it's a very changing landscape. And by the way, July 6th is a line in the sand. I expect that there's a better than even chance odds that there's an extension on that. You know, this is a game of negotiation, a game of bluff, whatever it's a game of. Let's put it this way: it's a game. It's a big game, and the big game is distorting market prices. So when you look at fundamentals, you look at technicals, very hard to get a handle on this. But what I do suggest is look at these markets when they really extend, you know, on the downside, on the upside. There's some opportunities there to make some short-term trades. But don't get married to anything in this market environment. I mean, take a look at what happened to copper, right? Copper, May 31st, 301. June 7th, 331.55. And today, 301.80 again. I mean,
all the way back, yeah.
Those are some wild moves. That's a big move. That's a 10% move up and down in less than a month.
And you know, when we take a look at this doesn't look too inviting. Copper is pushing these lows with volume, man.
Yeah, of course, but it pushed the highs with volume too.
Well, no,
You know-
no, I have 42,000, and we just came down on 59.
Well, I'm looking at the futures contracts here. I had the, let's just see here, on the daily chart, I had 3 big volume days, 230,000 plus contracts. On the 7th, almost 260,000 contracts. And on the downside, we're coming down on about 172,000. That's on the total opening.
All the
That's
contracts,
the total
yeah, I'm
volume
with you, right.
for all the contracts. So it's looking to me as bad here as it looked good on the top and as bad as it looked before it went to the top. Now, we have this Escondida potential strike in Chile. That lifted the price. You know, if that comes back into the fold, if those negotiations are not going well, you could see some buying in copper off the back of that. You could also see copper get pushed down. A lot of commodities, and we've been talking about this for a long time, have been making higher lows for many years, okay?
Yes.
And that's the demand side of the equation. Now, very interesting. The beans negated that this week because of the distortion from tariffs. So you have this trade situation which can really change and do a lot of damage to long-term charts in the current environment. And, you know, that's why volatility, baby, it's here, and it's going to be here throughout most of the summer if we don't get any kind of concrete changes here.
Well, when you go over and you take a look at, you know, Southern Copper, this looks to me like we're going to continue going south, because Southern Copper broke its swing point with volume, and that's setting up. This is pretty intense, actually. 58. It's a 10-point ABC down. It sets up a 42, which is going to actually bring you under the lows of the last 6 months.
Well, if that's going to happen, we're going to see a lot lower prices in a lot of commodities because that's going to tell us that the global economy is really going to suffer under this trade thing, and that should bring.
I don't see how you just think it's just going to, you know, it's like a negotiation tactic. It's just stopping. This is like a monster bureaucracy. I mean, if you know, when World War I started, right? The bottom line is that all these czars and everyone else had it made. And then they decided, okay, we're going to have a big fight, and they all killed each other, and like millions of people died. So it was like, that was the best of all times. And then all of a sudden they said, guess what? They blew it. So it's like, you know, trying to understand that you just think it's going to stop. It's like, I don't see it. I just don't see it. But we're going to find out pretty soon, I guess.
All I was commenting on was the fact that you said that copper, you know, Southern Copper looks lousy. Copper looks lousy here. If that's the case, copper tends to be a leader in the commodities markets, and you might see a lot lower levels, you know, in everything from oil to gold to silver to everything. I mean, look at platinum here. Platinum looks like it's going after its 2016 lows. So, you know, soybeans traded down to a decade low this week. A lot of volatility, but things are a little bit dicey right now. And, you know, I guess the finger to point here is at the trade. I don't see anything else on the fundamental side in any of these commodities that's changed so dramatically except for the trade issue.
Oh, yeah, no, I can see that. I mean, even, you know, this morning, you know, you saw what Ross was basically going after Powell, because Powell's saying, hey, the trade issue is going to slow growth. Ross is saying, no way it's going to slow growth. It's like, what are you, crazy, man?
Well, of course it's going to slow growth. Come on. That's, you know, that's right. You don't have to be a PhD economist to figure that out.
Yeah.
You know, if you put up trade barriers between some of the biggest trading nations in the world, that's going to slow down economic growth. It just has to do it.
No doubt. Well, listen, man, we appreciate the education. Look forward to the program, folks, right here, 5 to 6 Eastern Standard Time. Just go to YouTube, hit TFNN Corp, go to Tiger TV. Andy, you have a great one, safe one. We look forward to the show.
Thank you, Tom.
Thank you. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. you can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 244. Nasdaq's up 76. S&P's are down 23. We take a look at some of the higher volume equities out here. Let's see what we got out here. We got you got Advanced Micro down 91 cents. You get Intel off $1.14. Kroger, that's up $2.40. You get Starbucks off $1.66. Netflix is down $1.80. That bottom line, that's not bad actually. We go into the SPY. What you're going to see with the SPY, it looks like we're going to close. We're going to sell right into the close out here, folks. SPY right now down $2.25. We trading at the price point 273.77. Volume's not that big though. We're at 53 million. You're coming into the lows. Monday we were out there at 97 million. That low is at 273.53. So what you have here, if you're a bull, you'd love to see this thing hit right now. Why? Because you're not going to get the volume. If it doesn't get hit right now, guess what? Get some sleep tonight, wakes up, ba-boom. It'll come into that baby, and it will have the probability of basically smoking that with a lot more volume. NDX 100, which has been the leader out here, we take a look at the 3Qs. 3Qs also come off the highs. Now, this is what the difference is. The 3Qs are coming off the highs with volume. Bottom line is that, we had hit a high out here on the 14th. That high, the first high at 35 million. We tested that yesterday with 33. You're coming off this with 35. And what you'll see as we come into this close, they will put volume inside the Qs. IWM, small caps. Small cap was no doubt, that was the most powerful one out here. This also is coming off its high, and it's coming off its high with volume. We hit a high out here yesterday. Goes topside 19.1 million. You're coming down today with 21. You can expect, as we get into that close, what happens with the small caps, they can put a huge amount of volume into the small caps at the close. Silver, let's go take a look at the silver market first. We'll go through the SLV first, take a look at silver. So silver and this downdraft in the metals market has held up really well. Bottom line, deviant, yeah, but guess what? It's held up. The SLV out here today, you know, bottom line, well, this whole past week, didn't break its swing low. Swing low out here is $15.12. You had volume down there, 14 million, and we had come down and tested that with 7 million yesterday. So that's a good indication that we're going to get some juice. At the top of these ranges in silver, the SLV, 1635, we have some volume up there. The GLD, here's just the opposite. GLD, it's 10% of the gold market. That baby had broken its swing point, had an ABC down, finished the ABC down. Now, this is where it's going to get interesting because you hit the price projection. Well, it's rejecting it, and on top of that, it has not broken a major swing. The major swing inside the GLD is December of 2017. That was the low, 117. The high of that low, 119.50. We did get down to 119.82. It looks to me like we're going to reject that, and it looks that even on a weekly basis, it looks like we're going to reject it with light volume because what has happened is that swing area has 37 million traded, and thus far, with only 1 day left, we've done 18 million. The GLD likes doing about 5 or 6 million. So if we pop in there, you're talking about 23 million versus 37 million coming into Friday. And most times coming into a Friday, when you have been coming down in the metals market, it's problematic. What I expect we're going to see here, it's going to be problematic now for the U.S. dollar. Why? Because the dollar gave it up. If we do go over to the bond market, the note market, bottom line, bonds want higher price. They also rejected lower price out here today. They had a nice move out here today. You know, the 10-year, we went from 119.13. We're at 119.28. We've done 1.4 million contracts. We're going to be opening up tomorrow morning near the highs, and that's a big number, meaning, you know, the highs in this consolidation that's been out there for 2 weeks. You have a high volume swing area at 121.03. So the way this baby is set up, it looks to me like we're going to have some action. If we go over to Europe and we take a look at Europe, we'll go to the, we'll go to the FTSE first. The FTSE was down 0.9%. We had done the DAX when we were with our man, Mr. Andy Hecht. FTSE out here, bottom line, broke at consolidation, and let's see if we get volume. We might have an ABC down here. No, it's not an ABC down, but you broke with volume. And, you know, this is pretty, it's actually, the FTSE looks like it can go to 73.26. That's $300 down from where we are. If we go to the DAX in Germany, this little baby today was down just over 1%. The DAX in Germany, $183 you were down. You're trading out here at a price point of about 12,510. And I'll get the volume a little bit later on this one. I don't have it right now. But this looks like, put this on the weekly, actually. Yeah, this is going to the bottom of the consolidation. The bottom of this consolidation is down there at 11,726. So that's quite a way down from where we are right now. You know, this volatility, we got it in spades. After the close out here tonight, Red Hat. Red Hat's going to be coming out, RHT. Now, this is going to be an interesting one because this stock can move around quite a bit. They are coming out with their earnings right after the close. It's trading 165.64 right now. Let's take a look at this. Okay, so yeah, this looks like this is actually driving down even this week. This week we went from 170 to 164. You do have an expansion of volume. You get 2.4 million. That's a big number, man. Red Hat looks to me like 159 is game. This is going to be this is going to be a highly volatile move when these numbers come out, and we'll see what that does to the. And so the the applied option move is going to be 7.8%. So let's just call it 8%. Oh, that's a big move, man. So we're down $3.43. There's in the option market, they're saying you get an applied move of approximately 8%, 7.8 to be exact. So what you're saying there is that you're saying that Red Hat is a $12 move. That's what the implied volatility is saying as the traders are lining up on the call side and put side. So 12 bucks, let me just see this. So that would be 153. Yeah, your swing point, oh, look at that right there. Yeah, 153 is getting pretty easy. This is going to be wild watching this thing shake out, man. And big numbers. Intel, we go take a look at Intel out here. Intel, the CEO resigned out here today. Hasn't done much to the stock. Intel was traded from a price point of 54.53. They're at 52.22. And this actually, you know, it's interesting here. This looks bearish, but it's actually bullish. That's a lost engulfing. A lost engulfing is when you first trade down, you get a trend going down, you open higher, you close lower, you close at the lows, and that's what it looks like it's going to do. So that's not the end of the world there. It doesn't look it. Let's go over to the housing market. We go take a look at a couple of the home builders. Toll Brothers first. Toll Brothers right now, yeah, still going sideways. Stay right there, folks. Come right back. Our phone number is 877-927-6648. We have the Dow off 196. NASDAQ off 68. S&P's down 19. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is off 191. Nasdaq's off 67. S&P's are down 19. We'll see what the volume comes out. Right now, you get low volume in the NYSE. We're at the 521. So we'll see whether they can bang another 300 or 400 million into that at the close. Nasdaq Composite, that has some juice in it. Nasdaq Composites gets $2 billion right now. So they'll come in with about $2.4 billion. If we actually go over and we look at this composite, the composite out here today, we went to a high of 78.03. I believe it was higher yesterday. Yeah, it was 78.06 yesterday. So 78.06 yesterday. Yesterday we did 2.3 billion shares. Now what you want to see, and this is what's going to be raw wild, is that we're going to see, do you have more selling than we did have buying yesterday? Because buying, of course, went to a new high yesterday. We'll see where that selling comes out. Let's go to the NDX 100. We take a look at the NDX 100. NDX 100 out here, that just missed its high from yesterday, too. So the high of yesterday was 73.09. We hit 73.08. And so it's going to be imperative also. I believe the NDX 100, we already know is going to have higher volume because we go to the Qs. Yeah, it always does. It already does. So the Qs yesterday, we had done 33 million. We'll see what they put into it. Right now, you're at 37 million. If they get that baby up to about 45 million, folks, what you're going to see there is that you're going to see not only just some selling. I expect what you're going to do is you're going to get some follow-through. When we do look at the worldwide markets, I do expect we're going to have follow-through. The reason being is this, is that the world markets last night were down. It doesn't matter whether we go to Europe, we go to Asia, bottom line, right across all the indices, they were down. You're coming into a Friday, so picture this. You get Friday overseas tonight. You get the weekend. Who wants to buy? That's the bottom line. So we'll see where this trend goes, but right now that trend is going downtown. Stay right there, folks. We're going to be coming back at numbers after the close. We have the Dow Industrials down 182, Nasdaq down 67, S&P's up 18.5. Coming right back with the numbers.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials down 196. NASDAQ off 68. S&P's off 19. Percentage-wise out here, folks, what you had is that you had the Dow as well as the NASDAQ down 0.8%. S&P's down 0.6%. Gold contract trading at $12.70 an ounce. Gold went down to $12.62. Bottom line, you had an ABC structure on the way down with a price projection of $12.67. We rejected the price. We made the price projection, got lower, rejected it. Bottom line, we're going to see if we can catch a bid. Silver $16.30. You get light sweet crude, $65.73. Now in the light sweet crude market, of course, OPEC tomorrow. That's the number. We'll see how many barrels they decide that they want to put in the marketplace here, anywhere from between 500,000 extra barrels to 1 million barrels per day. Notes and bonds. You get the 10-year note up 7 ticks, 119.26. 30-year bond up 13, 143.29. Now both notes and bonds, bottom line, continue to want higher price. What's going to get intriguing here is this. You had Europe down last night. We had Asia down last night. When they open up in about approximately 4 hours from now, I expect they're going to be down. That's their Friday. As we're coming into our markets, I suspect tomorrow you're just going to have this cascade that will coming right through these markets. And I'm not sure how many folks want to be basically not necessarily holding what they have. I can see people holding what they have. It's going to be, do they buying new? If you're not buying new, guess what? That puts selling pressure on the market. King dollar. What do we have with King dollar? King dollar gave it up on price. King dollar went up and tested the October 2017 swing high once again, 97.040. Tested yesterday, closed below it. Tested today and really came down pretty hard. We're at 94.490. What I expect we're going to see there overnight, you're going to see more pressure in the U.S. dollar, some selling in the U.S. dollar. Euro, just the opposite way. Euro came into its lows, rejected its lows at the 115 area. Right now we're at 116.11. Yen's at 109.99. Let's go over and look at the yen. So what we're going to have here inside the yen, particularly because not just the Nikkei itself, but the gold contract itself. When the yen goes lower, bottom line, meaning when the yen goes lower, it means it gets stronger. That puts a huge bid under gold. And what we had out here today is this. The yen also failed. The yen got to a price point of 110.74, gave it up, moved, and bottom line is that you see movement when our markets are open. The big movement, however, is going to be when the Nikkei opens. And if we go take a look at that Nikkei, what you're going to see in the Nikkei, last night Nikkei was up 137. It had been as high as 22,782, gave up about 90 points coming into the close. Bottom line, that looks like it's going to go down to the lows of 2 days ago, which is that 21,167. So a lot of moving dynamics, particularly coming into a Friday. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. Now let's go to the world of Red Hat and see if they come out with numbers yet. RHT, they were coming out with numbers after the close here. The low in Red Hat for the year is 94. The high is 177. And let's see, it doesn't look like they come out yet. No, they haven't come out yet. We'll go take a look at some of the higher volume equities out here. So today what you had is this. We had Advanced Micro down 87 cents. You had Intel down 127. Kruger was up. That was up 255. We had Apple off 1. You had Facebook down 50 cents. Netflix was off $1.32. And when you do look at those FANG stocks, folks, bottom line, markets are down. They're still at highs. You have Facebook trading at 201. Netflix, we hit a new all-time high today. And Netflix hit a price point of $4.23. You end up closing at 415. Google. Oh, I wanted to look at Google earlier. Yeah, so Google. Yep, Google gave it up. So this is interesting. So Google, we were talking about this yesterday. This is a classic test. But guess what? It came down to light volume, too. This is a classic test yesterday, though. Google was testing at the top end of its consolidation, going all the way back January 29th. It had 1.3 million shares. High was 1186.89. We had done 1186.28. Bottom line, come off that high. Not a lot of volume, though. So actually, the way that Google is set up, that could get back up there again. Let's go take a look at the free Qs, the NDX 100. So what this baby did do, you made a high yesterday with 33 million shares. You're off that high with 41. That's good contract. That's good volume on the way down. We'll see if we get some follow through. The SPY, the S&P. The S&P was coming into a high volume low from Monday, Tuesday rather. Now, the S&P, the SPY, we came down to 70 million shares. We hit a low of 273.68. The low from Tuesday is 273.53. So what we did here is we stopped before the low. That, folks, is dangerous, meaning that it can get a lot lower. The S&P will basically rest overnight, wake up in the morning, it's going to go after that high volume swing low. We'll see whether we get volume to basically break that swing low, or you're going to get a rejection of lower price. The IWM also came off the highs with volume. IWM out here made a high yesterday, 19 million shares. You're off that high with 26 million. The GDX, just the opposite now. The GDX has been coming into its swing low areas, dramatically lighter volume. What we did out here today, bottom line is that, flat market. You had a low yesterday of 27 million, flat today at 19. We'll see whether the baby catches the bid. When you do actually look at the gold contract, to me, is set up to go higher. What we did out here today, you got down to that 1262. You did 267,000 contracts. You finished the ABC structure on the way down. What happens, folks, is that when you have ABC structures, whether on the way down or the way up, bottom line, once they've finished the structure, your probability is much higher that they do something other than what they were doing. I mean, if you're going down, you're going to get a counter trend bounce. If you're going up, you're going to pull back. The real question is going to be, what type of strength do we get if, in fact, I'm right that we're going to get a bounce now? Stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished out at 196, NASDAQ off 68, S&P's down 20. Let's go over to Red Hat. So a Red Hat closed, folks, at 165. You're trading 151. This option market had it nailed. The option move was 8.9%. Right now, you're down 10%. 151, that's quite a hit. Let's go take a look at the chart out here. So 151, yeah, you're right back to the breakout area from the 28th. And let's see what the Red Hat is saying. There's no doubt this is a real volatility equity when they come out with their numbers. So the earnings per share, the estimate was 69 cents. They made 72. This is the first quarter earnings estimate. Revenue estimate was 807 million. They made 14. Bottom line, oh, I see what it is. Okay, here you go. So that was the first quarter. What they did, Red Hat cuts full year revenue forecast, and it did miss its lowest estimate. So let's see what they have to say out here. They see fiscal year revenue at 3.38 billion to 3.41. They had seen that at 3.43 to 3.46. So that range come down pretty dramatically. They see fiscal year earnings at $3.44 to $3.48. They had seen $3.38 to $3.41. That's not that. Oh no. Oh no. Okay. They had the range at $3.38 to $3.77. So that is a big number. The first quarter subscription revenue was $711 million. Now, what a gross margin, man! This is amazing. They got an 86.3% gross margin, folks. Man, that is a big number. Big number. Deferred income, revenue income is $104 million. Operating cash flow, $346 million. So we closed down $3. You closed at 165. This thing's getting smoked. We're at 148 now. So big numbers, man. 148. Where's 148? Yeah, this going to 145. 145 is your last swing area. And this is going to be pretty wild watching this shake out. The reason I'm saying that is that this has been a one-move higher market. Look at this trend. Holy cow. It's quite a trend. Pretty amazing, actually. December of 2016, you were at 68 bucks. Been a one-way move higher. Let me put this on a monthly and see what we got on a monthly. Ooh, on a monthly, it's a parabolic move. On a monthly, I bet this is an ABC up that just finished. That's what it almost looks like. Let me see this thing. So you get your A point here at 750. That A point goes all the way back to 08. Approximately 54. You get about 45 bucks. Now that gets you to 90. Well, it's giving it up. That's the bottom line. Let's go to our man Jose and Brandon. Jose, what's going on?
Hey, Tom, for the record, I'm not a big fan of Rodney Dangerfield. I I think your pal there, Andy Hecht, tried to call me. The guy from Massachusetts who's in love with Rodney Dangerfield. Not a big fan of his.
Yeah.
Although he did have a great joke. He said his wife's cooking was so bad that the flies chipped in to fix the back porch screen.
Oh, my God.
Hey, Tom, it's so much fun watching Newmont freefall like this. If I called you 3 months ago and asked you if Newmont Mining could test the lows, would you have said around 37.88, around there?
Well, I guess you're looking at that low, man. What the heck happened to the stock today? Let me see this. 1 second.
Yeah, that's a good question.
Yeah.
Aren't you concerned all over the news today about this gold, this 50-day moving into the 200-day moving average? They call it the death cross or something.
Oh, I didn't hear that, but I know what that is. What that symbol is. Look at this thing, man. Okay, so Newmont. So to answer your question, yeah, that's a problem. 36.88. 1 second, let me pull this up. 1 sec. Yeah. Well, this is what you have. So when this came to 35, February 9th swing low, unreal. So 35.98. When it did that, what saved it was actually December 15th, week of December 15th swing low. Yeah, but this puts, so you got these calls, right?
I got the calls, but they're for September, but it doesn't look like I'm going to have enough time.
Yeah.
I have the 40, probably the 42s.
I'm trying to figure out what this, so you had a copper company buy 5% stake in Newmont today. It's like, why was this selling? Because it wasn't selling in this.
Well, it moved back into its range, 38.67.
No, I'm with you there. Right. Yeah, that's what it wants to do.
Okay, so this is going to be, it's salvage time, trying to get out of these dead fish, because this is not going to see 42 anytime soon.
It'd be pretty hard by September.
Yeah. Yeah.
Well, what you got to do first, we got to really figure out what happens. Newmont announced the second quarter conference call. We got to figure out what happened with this thing, because they didn't sell all these gold equities out here today. That's what I'm trying to figure out here.
Yeah, this was down 2.5%.
Right.
Well, if you figure it out, just send it out on the airwaves.
I'll let you know. And I love the quote you just did about the dead fish, because that was our man Bob from Weston, right?
Yeah, I mean, these auctions, they smell like dead fish if you get too close to expiration date. That's why you got to be on both sides. I'm bumming that I didn't buy the puts on this at the same time to call.
Yeah.
It would have been a free trade on the other side.
Yeah, 37.02. Well, what you want to see here, you get 36.88. That's the highs and the lows, and then, of course, you get that low, 35.98. We'll see how the baby shakes out.
It has to get there then.
No, it doesn't have to get to the low of it. You want it to get to the high of it right now. That's what you want, because what you don't want to bounce before it hits it, because then that would be building cause to get into that even heavier. Do you know what I'm saying?
Right.
Yeah.
Right.
You want this thing to hit it. I want it to hit it tomorrow, because the way the dollar's trading, it looks like, gold did, the ABC down. The bottom line is that I suspect that, gold wants to go higher now, but this is dangerous what Newmont just did out here today.
Yeah. Bad news. Oh, we'll have to rely on the GDX.
Okay. Yeah. Hey, take it step by step. Cooking, brother.
Okay, thank you.
Have a great one, man. Have a safe one. 877-927-6648. GH. Let's go back to that red hat for a second. So red hat, yeah, $20 down, $18 down, big number. Yeah, Newmont's, whatever I'm Mr. Dave Weiss. Give me a couple heads up. Newmont analyst expecting 13% minus year-over-year growth. Come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to Barrick Gold, ABX, next. So Barrick is the largest weighting structure inside the GDX. That was flat today. What's intriguing here is that because you had Newmont down so dramatically, it's pretty impressive that the GDX was even just flat. This Newmont deal, so we had volume of 4.8 million. We're coming into 11. That's on the daily. On the weekly, we're coming into strength with 8 million. We're coming in with 4.4 into 8. It's pretty intense, though. There's no doubt about that. Let's go take a look at a few more of them. So you get an Eagle, AEM. AEM out here was up 12 cents. You got Royal Gold, RGLD. That came down hard. They were selling this too. Interesting, man. Okay, so that is down $1.50. Light volume, but they hit that baby. Let's take a look at Rheingold Resources. Was up 3 cents. No big deal. Franco-Nevada. That was flat. Let's go look at Yamana. I gave it up on price. You get New Gold. That still couldn't hold it either. Now, New Gold, if you take a look at this, folks, don't buy this stock, but this is a little bit tricky, this one here, because this has been coming down for quite some time. You know, we had a high out there August of 2016 of $6. You're at $2. You know, you're coming into the lows from January of 2016. Now, you're kind of at light volume, but if we didn't take this week, last week it almost looked like that thing was bottoming. I didn't bite. The reason I didn't bite because this has been in such a downtrend. It's pretty amazing. The bottom line is that it's not over yet. That baby is just not over yet. Take a look at a few of the silver stocks. We got PAS, Pan American Silver. Okay, so that's a decent setup. Pan American was up 7 cents, back to its breakout area. Heckler, not bad, flat. EXK, which is Endeavor Silver. That's a nice setup. Okay, so then we got First Majestic. It's not a bad setup either. Well, we had some divergence in that market. That's the real bottom line. A big divergence. Let's go over and take a look at that euro. So what you had with the euro out here today, folks, euro got into a price point. We'll take a look at this intraday, and what you're going to see, this was quite a move. This morning, at 5 o'clock this morning, we hit 115.09. Your first real strength came in at 6.850 this morning. And when I was looking at this, I said, man, this is going to be pretty impressive. And it has the juice. The bottom line is that now what we have inside the euro, you know, the euro has been a one-way trade down since April 17th, as the dollar has been a one-way trade up since April 17th. That being said, we have been down in this area 5 days in a row. Each and every day, you've rejected lower price, but you haven't had any real strength. We had some real strength in this euro today. It moved. And one of the main reasons it moved, GLDLB, is because you had the central bank, and simultaneously we had you had the pound. If you want to see something here, GB, let's see. The pound moved in a big way. I'm trying to figure out if, just as the pound moved, did that, yeah, I guess all of Europe is going higher. Okay, so the pound, folks, April 17th, pound was at 143 to 1 US dollar. This morning, we got as low as 131 to 1 US dollar. Absolutely rejected price. Goes topside, and if you watch this intraday, this is quite a move. Look at that move. Oh, my God. Yeah, so same type of setup. It was at 6 o'clock this morning. The pound just explodes topside. Now, if that's where we're at, let's go look at the Canadian dollar for a second. Because what you're going to have is this. So when we go back to January, the Canadian dollar was 122 to 1 US dollar. Now we're at 133. If you're thinking of basically buying anything up in Canada, folks, using US dollars, go do it right now. Because I suspect what it looks like, let's pull this back for a second. Because what you have, and this is where this gets amazing, actually, when you start looking at the aspect of different currencies, particularly something that's so close to us. Because watch how this works. Let's say you're buying a piece of land, right? You can buy anything, but let's say it's a piece of land. Let's say the piece of land is 300 grand, right? Bottom line is that when you do the math behind this, 300. That piece of land, US dollars, is only 225 grand. But the thing that's amazing about this is that, to us, that's what it would cost, okay? So when you're looking at prices up there, it's imperative to understand, and it's easier, I think, when you're dealing with the Canadian dollar or the Mexican peso. For me, it's easier. Well, I know currencies now, but it's still easier. I'm dealing with Canada more than I'm dealing with Mexico. You know, so meaning because Canada's right next to us. Well, I guess Mexico is too, but I've been to Canada a lot more than I've been in Mexico. Bottom line is that you can see the correlation inside it, and you can see the correlation of how trade works, how tourist works, and if you want to see something that's really wild, and this is, I got to get to Argentina. Where is this? Peso. No, I want, when you see this, you take a look at the Argentina peso, and you talk about getting weak, and this is pretty amazing. So 6 months ago, the Argentina peso, folks, was 17 pesos to $1 US. We're 27 to $1 US right now. You can imagine food, everything else, less expensive? Yes, in a huge way. We go to Mexico, we take a look at Mexico. Mexico is 20 US peso, 20 pesos to $1 US. And, you know, bottom line is that that's got weak too. It was down at 17, oh, look at that. It's down at 17.9 just a month and a half ago. This has been in quite a range. And actually, when you look at it, it's almost like, it looks like the same type of range that the Argentina peso was in, except the Mexican peso did not get smoked like the Argentina peso. If we go into Brazil, now it's going to be interesting about Brazil, and this is where this is going to come into the aspect of our commodity markets if and when these tariffs get put on by China, because the Brazilian economy has plenty of commodities. So that currency just weakened from 3.1 reals to $1 US to 3.7. Now, so you can see that correlation. It's like, okay, number one, what country you're buying in, and number two, how strong is your currency versus that country's. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Volume-wise out here, we had 807 million in the NYSE. We take a look at the NASDAQ Composite. NASDAQ Composite came in at 2.3 billion. Twitter. Let's go take a look at Twitter. We had a question from one of the Tigers about Twitter. So Twitter's got quite a run, folks. You go back 2 months, you're at $28. You're at 45 right now. And bottom line is that I'd be getting out of Twitter. This is a sweet run. Let me pull this back so I can. My take is that Twitter wants to run to $40. That's the last time it was up on volume. Let me just pull this on a. Okay, so pretty cool. Okay, let's do it this way. That's interesting because it looks like you got an ABC up. The question is going to be, so let's do it this way. So you got 16. You got a $20 A to B. Which there you go. So this is what you have. We take a look at Twitter, and what you're going to see, this is a classic ABC structure on the way up. You hit your price projection, and when you hit your price projection, folks, your probability is pretty good that you're going to reverse or do something other than continue the way that you have, because ABC structures, the way an ABC structure works is this. You have two straight line moves with a consolidation in the middle. A to B equals C to D. So if the first move's $10, your next move's $10. And an ABC structure on the way up, what you're looking to go up on volume, pull back with lighter volume, you go up on volume, and as you're passing that B point, what you're looking for is that you pass the B point with volume. So I have Twitter right now on a weekly basis. And what you're going to see, your A point on here goes back to August 11th. That's $15.67. Your B point is the high that was generated out here on March 16th, which is $36.80. So you get $20. Your C point, and we did go up on volume the whole way. We pull back on lighter volume, pull back into the breakout area. You pull back to $27. Bottom line, that gives you a price projection of $47.39. We took out the B point, and we did take it out with volume. You get 322 million on a weekly basis, versus 119. And you made your price projection. Okay, so you have a full price projection, and then where I'm going with this, good, you get the price projection, and then what you're going to see is that June 6th, $40.23, that's the last time you had volume on the way up. And most times what you're going to see, that's where it likes to come back to. And that's not bearish. What that is that you had a monster bullish move. It does exactly what it had to do, wanted to do, all of the above, and you get a retracement. But guess what? You can have a heck of a retracement, and one of the main reasons you can have a heck of a retracement is because the move was so huge. When we take this move just going back to April, right now you're talking 60 days. There's an average of 21 trading days per month. So let's picture in 42 trading days, this just gained $30. It was a $14 stock. Think about how many times you've seen that happen before. You don't see that a lot, folks. So now the real question is that a normal retracement in a bull market move is a 0.382 retracement. Well, a 0.382 retracement in this equity is $35. Wouldn't be the end of the world. So take it for what it's worth. Out here today, let's go up to Canada. All those marijuana stocks yesterday, they brought Canada to a new all-time high yesterday. Canada was down 0.5% today. kind of looks exactly like our market, actually. Yeah, we hit a high yesterday of 1644. You're at 16330 today. If we do go look at the Canopy, which is one of the largest marijuana equities out there, let's see what they did. Yeah, look at, took off, got over its high. So this is almost, this is a classic too. You had a high volume high, was going after the high volume high on a weekly. So thus far we've done 54 million shares versus 87, but this thing took this out like in a heartbeat. It's pretty amazing, actually. So our man from Jim and from Minneapolis, he had given all the Tigers and Tigresses a CRON. I remember this one. I know. Let's see what this one wasn't moving like weed, that's for sure. But I believe, yeah, they're in a different spot. So CRON, CRON. Let's see what they do. Oh, I see. This is an investment company that invests in medical marijuana producing companies. So the low's $1, the high's $11.90. It moved out here today. It moved 45 cents today. It has some volume behind it. It doesn't have a high volume high though, but it has a high volume spike at 8.15. I expect you'll probably get to that 8.15. If we take a look at a few more of these, equity. These guys, okay, so here, Aurora Cannabis. Yeah, that's one of the big ones also. So, ACB. This is also a Canadian stock. Was up 5% today. Medical marijuana, let's see. Oh, they're a licensed producer of medical marijuana in Canada, Vancouver actually. Well, they're headquartered in Vancouver. That's interesting. That's set up like Cronus. So, you know, what's intriguing here is that this is a good setup. This is actually a good setup. This is coming into a swing point with volume. The swing point had 39 million. We did 40 million today. This looks like it wants to break. See, you know what? This is where it's going to get interesting. So what you have here is that you have Canopy, who has taken off in a big way, topside. The market's looking at okay, what other equities have not taken off? And when I just brought both of those equities up, you know, these are higher, but they certainly haven't taken off like Canopy took off. And I suspect what that's all about is because their growth is so much more. What they expect to do, they did 79 million this year. They're expecting to do 314 million next year. And if we go take a look at, thanks, Kelly. I got one of the Tigers getting me some more medical marijuana stocks here. Well, they're actually going to be. So, well, look at this. Look at this number. Oh my God, these are big numbers. So, this APH did 36 million this year. They're looking to do 211 million next year. Recreational marijuana, Canada. There it comes. Stay right there, folks. Come right back. Red Hat is getting smoked after the close. Red Hat had closed at the 165. It's trading 148.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dow finished down 196, NASDAQ off 68, S&P's off 20. If we do go over to the Dow Industrials, where it's going to get interesting here, folks, as it's been a one-way trip on the Dow, no doubt. The Dow topped out at thus far January 26th. We're basically first day of summer solstice today, right? And what we have out here is that we still have that high volume swing low from February 9th. High volume swing lows love to get tested, 23,360. So it's approximately 1,000 points from where we are right now. Now, you think that's bad. The S&P is the one that is really at highs, and that high volume low is sticking out like a sore thumb. So same day the S&P topped out, 2872, the 26th of January. Bottom line, the high volume low from February 9th is 2532. That is one monster number, big number. We're at 2749, so we're talking about 220 points downtown. Huge number. If we go to the Russell 2000, RUT, we take a look at the Russell. Russell right now hit all-time highs. Russell is also a little problem child because that never came close to testing its all high volume low from February 9th. And the Russell, this is really pretty dramatic, actually. So the Russell is at 1688, and we are talking 1436. That's a big number. Russell first would have to really get some heavy destruction going just to get back inside its lower range. When the Russell broke out of its range, that was a good month and a half ago. Actually 5 weeks ago. May 16th, the Russell broke out of that range. We were in that range for about 4 months, broke out of it. Bottom line, what I expect you're going to see out here tonight when we have Asia open, you're going to have some pressure on the markets. Europe will have some pressure as we get Dollar looks like it wants to go south. So if we hit that dollar going south, you're going to get those metals going north. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Andy Hecht's coming right up. Look at him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.